Hello, very good evening to the people in India and very good morning to the people in the US. It's such a joy to connect with you. I know it's the last minute of the tax season, so the people who are still yet to file their tax returns, our team is working long and strong to serve you with the best of our value and expertise. Okay, so we have been getting so many queries on kids income, how the kids income will be taxed and all. So recently we had a client whom we were working with, and her kid won a spelling bee, a spell bee prize money of more than $50,000. And then we also had other clients, who had unearned income kind of interest income, and also the 529 savings plan. And I've been getting this queries, ever since the iPlan has been launched, which is very revolutionary and widely accepted as an employee benefit program also now. So it's such a joy, to answer these queries, and because children are a reward from the Lord, a good book says so, that it's a reward from the Lord. And whatever, that you as the parent are saving for the kid, I think you have worked hard on that, and I believe that we should also, work hard to save that hard-earned money. Okay, so I am Nanda Kumar K V, founder and CEO of iLead Tax Group. We have iLead Tax Academy and iLead Tax LLC, as most of you know. So today I wanted to talk to you on how these kids' income is taxed. Okay, I hope you like this presentation. $400 for that particular financial year. Now, when you look at unearned income, means most of the investment income only. So it could be interest, dividend, capital gains. Is coming into place, it should fall into one of these categories: earned income or unearned income. Earned income. So the recent taxpayer, that I was working with, one of our very close clients, so that we were working with, her friends were saying something. They said, that you should include that in your income, or the kid should file separate return. There were like multiple opinions that were coming up. Then there were some free websites which were showing a different tax liability, and obviously she was worried. So I thought, why not make a video on this, so that it clarifies the general public at large. Now here, when you see a child must file an income tax return only if his earned income is more than the standard deduction for that year. Now, what is the standard deduction? So, for 2019, the standard deduction is 12,200, right? Now, for 2020, the standard deduction is 12,400. So, if your child had earned income more than 12,200 or $12,400, then he needs to file a tax return. So maybe most of the times the taxpayers or clients also, what they do is they just try to Google, find some information from the free website, and then they say that I have to now include this. Okay, I claim him as a kid on my tax return, I claim him as a dependent on my tax return, and parallelly I want to include his income on my tax return, or I want to claim him as a dependent on my tax return and then file a return separately. Okay. But the point is, are you evaluating these options? I mean, if you see here, we have given so there are two opportunities. There are two opportunities here. Two opportunities available for you. Now, what happens here? Now, when the kid is not being claimed as a dependent, what happens? Foremost, you cannot claim the child tax credit of $2,000, assuming he has a SSN. Okay, if he has ITN, he would get $500. That's something that we all are aware of. Now, what if the kid has been claimed as a dependent on the tax return? Then what happens? Then the standard deduction is limited. The standard deduction is limited. Of course, you get the child tax credit. If you have claimed the kid on the tax return, yes, you get the child tax credit, but the standard deduction might be limited. Okay, now what is that? So the client that we worked on, we noticed that the second option was much beneficial for our client. See, if everything the AI could do it, artificial intelligence or the online portals could do it, I think there's no need for accountants. Maybe you can just build the software and start relying on it. I would encourage you, to always consult with a tax consultant, a tax advisor, an accountant. I mean, that's his job. That's his job. All that he does is taxes. Maybe if you're in programming or in the business, that's your business. But for an accountant, for a tax practitioner, day in and day out, we will be talking to the clients just on the individual taxes, business taxes, incorporation, payroll, bookkeeping. Now, this is the language that we talk every day, right? So, if you're getting that for free, why not get a free consultation? Okay. iLead offers free consultation. I don't know about others, but there's our contact number, right? 530-HI-iLead. 530-444-5323, right? If you have still not filed your tax return and you're looking for any help, please call our office. Our team would love to serve you, right? a student, okay, so the students from the iLead Tax Academy, if you're watching me, so even at your workplace, okay, when you're preparing a client's tax return, you got to evaluate in both the scenarios. What if the child is claimed as a dependent, because client does not know the numbers, okay, but you got to know those numbers. So check what is the refund or the due if the client is claimed, I mean the kid is claimed as a dependent. Two, when the kid is not claimed as a dependent, right? And then give what is best to the client. Okay. What if the kid has only unearned income? Now what happens here? And as I have told you, even for amending the tax returns, you still have time. You can go to last 3 years tax returns and amend. Okay, amending the return is not illegal or against the law. Okay, so the law gives you, like, if you feel anywhere, you're watching us every week, thank you very much. So if you're learning something and you feel that, hey, I missed this out last year, maybe next year, I'll go with them. Okay, welcome, please join us, we would love to serve you. But at the same time, you can go back last 3 years. I think I told you, in case you're looking at amending the 2016 tax returns, the last day is tomorrow. That is July 15th, 2020, in case you are amending the 2016 tax returns. But 17, 18, even 19 tax returns, as you're watching these videos, these sessions, and as you're emailing me, getting some clarifications, you feel that, somewhere you missed something, you have 3 years time to go back and amend the tax returns. Okay, please write to us and we'll help you on this. Now, see, file a joint return, and the second option that is available is the parents can make an election or a choice to include that kid's income in their tax return. Okay, what happens? Only about unearned income. The kid has only unearned income, means only the income that he has got from investment, like interest, dividend, capital gains and all, right? Now, how does this happen? Okay. Income, more income means more tax liability. So in our case, we were referring to our client. So if we had to add, $53,000 or $55,000, worth prize money that the kid has earned to her income, she would go to the next slab. Next slab, her entire income, right? So that will. Parents' income tax rates. So that's why, so even if you are a student or a practitioner, I want you to consider these options, evaluate the options, check what if the kid is filing the tax return, then check what if the parent is including that income, check the outflow, what is it in both the scenarios, and then give the best to the client. Simple terms, okay. There are 3 age requirements. One, if the child is below 18. The second one, the child is at 18. The third one, the child is above 18 as a full-time student. Getting it? Let's take a look at this age. So when we say at the end of the tax year, it means December 31st. By default, for the individual taxpayers, the default due date is December 31st. It has got nothing to do with the child's birthday. Okay? Call him as your dependent again, right? And for the tax year, so Bunty should not have a bubbly. To include the kid's income on the tax return, I think it is very, very clear that kid will not be filing any return separately, right? Is that clear, right? The first one, A, what we saw now was kid is taking the income, right? Now the B, what we are seeing now is parents will elect to include that income on their tax return. So the kid is not going to file any more taxes. Now see, though it's a rule, what I have noticed, even the recent client, that I was referring to, I'm giving you, live scenarios. The child got money last year, 2019. They did not consult an accountant until July. And obviously, the estimated tax penalty was applicable. you don't pay the required taxes by December 31st, the estimated taxes will apply to you. Okay, so that's why we say that you need an accountant. I mean, kings have ministers. And if you are a king, when they say customer is a king, I think you should have a minister like us to minister, to administer your funds, right? To administer your hard earned money. If you're a king, have a minister. It means the last year refund, okay, adjusting against the current year tax liability or something like that, okay. So what has happened? You have not paid any estimated taxes, and the last year refund is also not applied to the current year tax liability. I think the title itself we have written that if parent is making this election, the kid won't file the tax return. In other words, the kid has to file a tax return if you are not making this election. Earned and then unearned income. I mean, is a wizard, a very intelligent guy, and a girl, right? A very good singer, a very good artist, wonderful IQ, right? Maybe can write wonderful programs. So we have seen, so many tech wizards, right? Kids. So now that money, what they are earning as wages or compensation from their employer, right? Now that money they have invested and they're getting interest and dividend also on that, right? Maybe employer gave them some stocks or whatsoever, right? Now if they have both earned income and unearned income, now how does that get taxed? Let's see. The earned income plus 350. I mean, just like how we computed the standard deduction for the kids, the same thing will apply here too, right? With the TCGA, the Tax Cuts and Jobs Act, there's something called as Secure Act, wherein the entire, family income tax planning, a little bit here and there, it got affected. Now, So income up to $2,200 will be taxed as per the estate and trust tax tables, and above 2,200 it is the parents' highest income tax rates. So with this, the tax liability is going to increase. It will increase. Even the estate and the trust tax rates also, it's almost like 37% for a $12,000 income. So you need an the pandemic relief economic impact payments, right? The stimulus tax. So, oh, my friend said I have to report that income. Okay, he's a very good friend, but he's not a knowledgeable friend. So maybe we know it a little better than him. Okay, we. Not that much, because you are talking 12,200 and all. I don't think my kid has so much income. Maybe some 3,000-4,000 here and there. Okay, here and there, right? Here and there, earned income and unearned income, right? Even that, every dollar counts, right? Even that must be reported. Fine, let's take a look at this. What I mean, this applies for anybody. So even if you are a single taxpayer, because of the current pandemic or whatsoever, you didn't had enough money. Okay, I mean, for married couple it's like 24,400 now for 2019, and for 2018 it will be 24,800. Okay, now if you got income of $22,000 but you had a withholding of $2,200, then you got to file your tax return. You can claim a refund only when you file the tax return. That is one. And then the second one is, you may have some credits, like refundable tax credits, in the sense that though your tax liability is zero or nil or low, you will still get those credits. And all that you have to do is file your income tax return. And only an accountant, a CPA or an attorney, EA, enrolled agent, can tell you whether you qualify for a refundable tax credit or not, right? What are some of the $7,500 refundable credit, which was repayable in like 15 years. So that is something, that needs credit also, as good as like $14,000 plus, $14,000 plus every year. I think $14,080 something. Every year it keeps changing. at least $14,000 you get. Remember that just because the income is below the standard deduction limits, it doesn't mean that you are not required to file the tax return. You may be required to file a tax return. You are not required to file the tax return, but you will get a refund only when you file the tax return. Not only the refund of the withholdings, but you may also get the refund of the refundable tax credits. Okay, and that is possible only when you have an open conversation with a knowledgeable tax accountant. Okay, given the current economic conditions, okay, you need to plan your money well, right? I'm not asking you to save money. You should know where to invest, okay? Where to invest rather than giving an interest-free loan to a heiress. I think you should know how to leverage the resources that you have, like us, and then plan your money well. Okay. I mean, medical expenses, whether it's co-pays or the maternity expenses or some attendant coming in from India, mother or mother-in-law, usually they come, right? The health insurance, the travel, all that, the medical care expenses, the medical expenses, right? All that comes into it. Unfortunately, the current, situation also, if there are any I mean, just because you got a fever or cold or something else, the government is not going to give you a deduction for all the expenses that you incurred. The expenses that you incurred must be more than 7.5% of your annual gross income, right? So in case both you and your wife both are working, right, and you put the baby in a daycare, or you're working and she is a full-time student, she is in her education, pursuing a master's or something, or you're working and the spouse is differently abled or medically not capable of taking the care of the kids, she herself needs the support, right? So you put the baby in a daycare or something like that. Whatever expenses you incur, I mean $3,000 per qualifying child, below 13 years of age. I mean, only for 2 kids, that's up to $6,000. On that you can claim the child tax credit based on the income slab that you fall into. Anywhere from 20% to 35% of the expenses that you have incurred, that can be claimed as credit for child and dependent care expenses. So it's good. It's really awesome. We have clients who have done that, right? So kudos to them. You're giving a new life, right? You're giving a new life. Acha, just teach that habit. You never know, I mean, we have seen cases like people in Virginia, Delaware, New York, Wisconsin. I mean, There's so many states, which give a state tax deduction for you for this 529 plan. Now, not just only it goes tax free, you also get the state tax deduction, and you never know, how fast the money multiplies there. So by the time the daughter goes to college, I think you would have made a good chunk of money. So that will help you. Okay, maybe it could be as low as $500 per month in a 529 saving plan in the name of your daughter or your son. I think that will be good. Yeah. Let us know if you need any help. The household employment taxes. Yeah. When I teach in the iLead Tax Academy, I say Ramu Kaka. So if you have, some Ramu Kaka or Sundaraya Tata at home, so you must not miss out, because you know how the things are, right? You have a household employee, you got to pay household employee taxes also. So nanny tax is almost the same. See, employer will deduct tax based on the information that you give to him. So you have to make sure that you give the right information, and we help you with a free W4 planning also. So if you need any help on the tax calculation, it comes as part of iPlan also. Yeah. So just talk to our office, and in case you have given on Nanda Kumar K V at iLeadTax.com. Any tax videos, right? You have any topics that you are struggling with, which your accountant has never told you, never discussed, you witnessed it. So probably you can just write to me. I'm Nanda Kumar K V at iLeadTax.com. Yeah. And I'll be happy to help you. Okay. And before we close, still, we get so many queries on the iPlan, and I thought, I'll